Hey Alpha fam, Coach Sham here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. So let's get into the market, guys. So Sunday, and I always say this, never trust a Sunday dump, never trust a Sunday pump. I just don't trust any moves over the weekend because liquidity and volume is so low. Guys, the volume yesterday was 32 billion. All right. So what has happened is we had this little bit of a pull down, which was a little disheartening because we had finally just broken above the 50-day on the 4-hour. The first time, I think, since where we lost it on the 18th of January. So I was a little disheartened to see that. But again, I know how these things work out. And then if you put a fib here, guys, look at this, a very interesting level we keep coming back down to. You can see we're finding support on the 382 on the 4-hour, but you can see this 236 has been hell of resistance over just the last couple of days or so. Waiting for the U.S. market to open. I'll be honest, the futures didn't open up as strong as I thought they would, but they're seeming to get a bounce this morning, which is kind of interesting. But they moved down like this is this is futures for S&P. It's down 0.3%, and then Nasdaq did the same thing. But both are having a little bit of a bounce this morning. We also because yesterday was a bank holiday, all right, and today's a first day open. For the markets since last Friday. I'm a little interested to see how things go today. I don't typically like Mondays because typically Mondays is like when you will see usually a dump, and then from there things will kind of settle, and then we'll start moving whichever direction for the week. I've been saying it for a little while now. I am wanting us to start moving with some momentum. All right, and I've been saying this for a while, and the reason why, guys, and I've said this a couple weeks ago. I said if we didn't immediately deviate back up here, like push up aggressively and reclaim this trading range that we lost, that I would have to conclude that this was not a spring, that this was just a breakdown of a bear flag, and then this is the next level. And since this is the next level, what I will need to do is I would have to look at this entire zone, and I would have to utilize my technical analysis skills to try to determine two things. Are we going to go lower? Is the local bottom in? And if the local bottom is in, how long are we going to stay in this accumulation range? I honestly think we will be in here for a couple of months. All right. And the reason I think that is as we get closer to May. All right. Because we're in February. All right. We're halfway done with February. So we got March and we got April. All right. I think once we get out of February, going like basically out of March, creeping closer and closer to Jerome Powell being replaced, I think we're going to see the market starting to really rally behind that. Prior to this happening, guys, I can see it, and I see Marty Party catching a lot of flack for this. Basically, he said the same thing that I did, which was this was an accumulation range, and if it was accumulation range, look for the spring. When the spring happens, look for the retest for your entry. This is why I always say the retest. I never say enter on the spring, always enter on the retest, because you never know what's actually going to be a spring and what's actually going to be just a breakdown of a zone. And that's what we had here. It wasn't a spring, and the way we know that is when we did this retest and we started pushing up, and I said it a few days ago too, we have to move with some momentum. So when we started pushing up the other day, I got a little bit more confident feeling, but then all of a sudden I seen it start pushing back down. And what's happening is, and it just shows the sentiment of the market, we can't sustain a pump because people are still looking to exit on any opportunity they can from their bags on any type of pump that they get. So anytime the market starts to go up, that's where you get this added sell pressure because you still have people that are still confused. You have this massive disconnect in crypto right now from the four-year cycle people to the liquidity cyclist. I am personally in the camp that I don't really think we ever went through a bull run. Yes, Bitcoin had some massive outperformance, and there were some altcoins that had some massive outperformance, but it was very isolated sectors of outperformance or narratives that would catch massive amounts of attention for very short periods of time, but then that would fade off. So and we've seen multiple of them. We've seen like the memes come around, and the agents, and then the then the perp dexes, and then the privacy coins, and like all of a sudden you would have these small sectors of outperformance. But as a broader market, no. We didn't ever have alt season. Alts didn't all go up at once, and I still don't think that will ever happen again, guys. I just think there's too many alts, too much dilution, and there's not enough liquidity to go around. So you have to be very specific about what you're holding, and you need to be very specific about holding projects that, to me, the number one thing for them is do they solve a TradFi problem? Is there a way for TradFi to gain attention on that narrative because they're the ones that are driving these markets, especially crypto right now, guys? Because retail is not in crypto. Retail hasn't been around in crypto for a while. This is a TradFi driven cycle. This has been a TradFi driven cycle, and this is a macro asset. So it's got a couple of different drivers, but one, that's why you have to understand what's going on with the macro. If you don't understand the macro and the macro setting that we have, then you're going to be completely lost trying to trade this market. It's going to be very difficult for you. And again, guys, like we were just talking about it, and I'm finally starting to see people highlight this, but we've already been highlighting it and talking about it, which is quantitative easing is here, guys. This thing is just finally really started. They just printed and put in another 16.47 billion the week before they did 18. This thing is clearly going up. If you look at this and back it up, at no point in the last 3 years has this thing ever deviated up other than this one time right here in 2023, which was a one-time injection, and then it bled it back out, all right, and sucked it immediately back out. We are now finally moving up. What's even interesting, and I don't like using the moving averages for something like this, but I bet if I went down into some of the lower time frames like the daily and the 4-hour, I bet this thing has reclaimed the 50, all right? Because it only shows it on the weekly. You can't see those lower time frames, but I bet it has. And then also, too, we have to also acknowledge these type of things, which is the ISM is finally the first time. We've never seen it ever expand over 50. We're just now getting that. All right. So these things are also kind of coinciding, these macro drivers for what I think are going to be the creating the liquidity conditions required for alt season and these things to happen. These things are just now starting on the back of basically the most constrictive, largest interest rate hike in human history off the back of that, which is back from 2021, 2022, when the Fed had to raise interest rates and did this massive tightening because of inflation. All right. So you have to understand these things. And this is why I always tell you guys, if this is the first time you've ever seen any of my content, this is why I tell people the way that you really learn how to outperform in this market is you have to combine the macro, the fundamentals, and then add on technical analysis for your entries in order to give you a real edge over the market. If you only hyper focus in on one of those, you're going to miss the other part that's a driving factor on creating price action, guys. You have to understand it. You have to combine this together, all right? And if you're looking to start trying to learn this stuff, guys, like if you want to learn the macro, learn the fundamentals, learn the technical analysis, and how we take all of these things and combine it together to give us an edge over the market, guys, click the link below. We'll see you inside.